Hey, everybody. I want to talk to you about a trade that we've been in now for almost 2 years and a trade that we've talked about for many years. And that is the trade in gold. What's been great about this trade in gold is it is a prime example of everything that we teach all rolled up into one trade. Everything from identifying a macro fundamental theme, validating that theme through plurality and through price action, and then managing the trade using all the tools that we teach. Managing the trade using options to always be trading from a place of strength, to always know our exit. In some periods, being able to collect income, and in other periods, being able to let it run. And so I want to show you, A, what we were saying back in 2021, 2022, and 2023, as gold had several times where it rallied to the highs and we didn't get in. And we analyzed the market, seeing what was going on, and we knew that it was unlikely to follow through. But we watched, and it was a prime example of just because we believe in a theme, we don't get in until the market tells us so. And so we were patient, waiting year after year after year. In fact, I made an enormous amount of money between 2006 and 2011 being long gold. And in 2011, when the top was put in, I basically exited the gold market and barely traded it for 12 years. I traded gold miners in 2016 to some success, but other than that, I largely was out of the gold market because I didn't believe it was ready. But we started watching it closely during COVID in 2020, and then we continued to watch it in 21, 22, and 23. And you can see one of the things we're showing you is the actual video recordings from our reads report, along with what we had in the actual reads report, where you can see me dissecting the market and talking about the conditions and talking about how powerful the theme could be, but also that it wasn't the right time. Then in 2023, you can see me talking about late in the year that it was getting ready and that we thought 2024 was going to be an outstanding year for gold. Gold has yearly support right in here that I don't think is going to give way. This is actually a very strong area for next quarter, for fourth quarter. Look at the gold volatility, super low. At some point, this is going to be an amazing trade. There's certain things you see every now and then that you just do not add up. And this to me is insane. Why on earth should gold be at multi-year low balls in the midst of everything going on? Are you kidding me? But I'm not going to run out and buy it right now. I'm going to wait. I'm going to wait for the right moment, and then I'm going to fucking smack it. But it's not right yet. We've been operating on a technical thesis that gold would have a hard time breaking out up this year. Mark just talked about this. One of the things I want you to note is that we've seen the same area hold in 2011, 2020, and 2022. And in this recent rollover, we saw gold miners really get smashed. So thematically, I love the gold trade. You know, when Mark talks about gold going to 3,000, I can totally see that happening. 3,000 seems low to me, but it's not. But the biggest thing, no matter how much I want to be bullish gold, whenever I come back in here and I look at it, I just can't get there. I want to get there, but I can't. So we're seeing gold here. Yeah, it's up in here again. And usually the more times you go up and test the level, it'll break. It'll eventually break. But this level's been holding. But one of the core elements that we talk about all the time is the concept of plurality. When we've got a really good market, it all goes up. You look at AI right now, every AI stock is going up. Right? When a market is strong, everything goes up. And when a market is really weak, it all goes down. So if we're operating from this thesis that gold is going to be strong, we should see it happening plurally. And this is another thing I just struggle with because we look at this chart. This chart looks very, very different. One just one thing I want to point out. I think this is potentially a yearly high right here. And keep an eye on that. All right. Well, look at this. This is gold miners. This is a 12-year downtrend. It's nowhere near the highs. The junior miners look worse. So if this is plural, these miners should be up at the highs. They're not. Okay, so gold had an extremely strong demand response off of last month's lows, rallying all the way back to monthly resistance on high volume and even threatening to break out up. The quarterly buys are significant. Should gold get back down there, I would expect those to hold. And when you look at the chart, you'll see it launched out of there. We'll go over that. The thing I'm really excited about, I think gold is setting up fantastically to break out next year. And if it breaks out, it's going to have the potential to not just break out, it's going to have the potential to explode. So we want to keep that in the back of our mind. Watching this gold here, we want to see, and so far, gold is hung in near the highs. There hasn't been very much selling come in. So you want to see up in these resistance levels, is selling going to come in and start to take it down? Or is it not going to come in and the market's going to hang around and actually start to set up for this trade that we've been watching this trade, this breakout next year, been watching this for over a year, waiting for it to set up. I think next year we're going to get it. This is one thing also keep an eye on, just because like when you go to really get long gold, though, you're going to want to keep an eye on this vol, because this vol could explode. So you could get the direction, you could get the vol expansion on the trade as well. This is where we talk about going from really low contracted volatility to really high volatility. And so it's had a huge run. This is why I'm saying it's starting to, when you look at it from a volatility perspective, it's really stretched. It's ready to snap back. If we look at the yen was in a tight range for a number of years. And you can see then it had a breakout out of it here in late 21 and had this huge run up, and it came back and retested these highs. So it's had a really big range too. Right. So we're in an area of volatility digestion. So now if we go look at gold has been in a multi-year range. So this is one of the things we're looking at. So how is it going to resolve itself? You can see here, it actually tried to break out up here. But ultimately, this is what we're watching, and we think we're going to get a really big move out of here. Mark and I think that this gold move is going to be a generational move. We saw a little bit of this already from 2005 to 2011, 2012, 2013, where gold had a huge move. You can see it here. This is the move from 2006 to 2011. And basically, we've really yet to convincingly take out the highs from 2011. So we've been going sideways now, essentially for 12 years. Now, one of the things that Mark and I both think is we think this is about to start another leg up. There's various opinions about this, but I think gold could go to $5,000 an ounce. Now, where we actually got in, we got long on March 4th of 2024. And I'm going to show you here on this chart with monthly candles. Here is the trading range that we were talking about in the report. You can see here was the high in 2011. So I basically caught this move. And when it came out of here, I was out. As I said, I traded miners a little bit in 2016, but then I was largely on the sideline. Well, we had this rally in 2020, and then it came off, and you could see it rallied again in 2022, rallied again in 2023. And all through this time, we were holding off. We were waiting. But we thought, basically, using all of the metrics, using all the tools, using our volatility analysis, using multiple time frame analysis, using price action analysis, using plurality, using thematic analysis, putting all these things together, we thought that 2024 was going to be the year it would go. And you can see right here, it started to break out. This is in March of 2024, and this is when we got long. You can see also right here, this is a weekly chart. Right here, this in March of 2024, this is where we got long. And you can also see it on the daily chart right here. Right here's March 4th, first. March 4th is when we got long. Okay, and then we rode that trade all the way until 2025. And 2025 is the first time we hedged it. And then we hedged it, but we let it run. And then when we put this high in April, we started selling call spreads against it. And we sold call spreads against it for about 5 months. And then it broke out again late in the year. When I got up in here, we sold spreads again. And then it broke out again early this year. Okay, now we've ridden this all the way through, but up in here, I started talking about that I thought the top was near. One of the reasons I felt that way was because of silver. Silver was going parabolic, right? Silver exploded, which goes back to one of our core themes of plurality. One of the things you can see, particularly in 25 and 26, the whole gold theme became plural. Gold miners exploded, junior miners exploded, silver exploded, all of it took off. And silver went crazy, rallying to over $100 an ounce, peaking at almost, about over $120 an ounce. In this price action, again, using our volatility metrics, our way that we measure the market being stretched, whenever the market becomes parabolic, starts having parabolic moves, we know the end is near. And we have metrics, we have indicators we use to measure that the market is too stretched, that's gone too far. And silver was flagging those. Now, gold was kind of lagging behind. But with how frothy silver was, and then just recently, gold started to take off, and gold started to go parabolic as well. Here, for example, we have what we call volatility extremes, and gold got into the volatility extremes last week. This is a very rare event, and this is a sign for us that the market is close to being done. In our Mastering the Matrix report that comes out every week, there's a monthly letter that comes out with weekly updates. On Monday, I made this post, which so we've been hedged the whole way up. So we've always been in a good place. But when the market started to go parabolic, our hedging picked up. We started hedging more and more aggressively. And you can see what I said here. I said, today we're going to continue to roll our GLD puts up. We expressed the trade in GLD. Silver is going parabolic and GLD is right behind. We're rolling our puts up, so we are hedged near the highs at the point it breaks. Remember, GLD and SLV could easily have a 5 to 10% gap down when the top is in. There is mass euphoria in the metals today. The bullion dealers near my house, which usually has no one there, today had over 100 people lined up to buy physical silver. I'm receiving texts and having people I've never met coming up to me and asking me about silver. This is what happens at tops. We could be early, and the market could continue to rise, but the beautiful thing is that we win either way with this strategy. So we bought the 465, 450 put spread and rolled our puts up to at the money. This is on Monday. Okay. We go back to the chart. It was on Monday right here. Now on Wednesday, it gaps up and runs again. So on Wednesday, I come back and I give another update. You can see here, I said, we're going to roll our 465 puts up. We're going to buy the SEP 490, 465 put spread. GLD continues a parabolic run, and we're going to roll our puts up when it surges. And so you can see the chart here. And so essentially, if we look at GLD, which is obviously mimicking the gold future, we're hedged at 490. So we are out virtually at the top. So you can see everything coming together. You can see us being patient for several years, waiting for this trade to set up. Then the moment comes that it breaks out and we get on the trade. Then we ride this trade for almost 2 years. And when it goes parabolic, we hedge it at the top. Now we still have a position on, but with the position we have on, we're barely long, and we have the right to sell at $490, which is near the highs. So just to show you, here are stats on this trade. You can see we entered the trade on March 4th, 2024, right here at 196.01. Our first hedge was January 21st of 2025, where we bought 240 puts at 670. And then you can see throughout the life of the trade that periodically we would roll our puts and we were selling call spreads that were going out worthless, selling call spreads that were going out worthless, selling call spreads that were going out worthless, rolling our puts up. And you can see we just continued to manage this trade. And then recently you can see we started rolling our puts up. And finally, here's the trade I told you about. Here's the last trade where we bought 490 puts and sold the 465 puts, rolling our puts up. Okay, so there's all the trades that occurred over the last 2 years. I'm sharing this with you because if you really want to learn how to trade, this is how you do it. It's the whole book, A to Z, from how you find something great to trade, how you are patient waiting for it to set up, how you get in and strike when the moment's right with confirmation, then how you can ride this trade. We time frame rolled this up. We rolled it up into very high time frames for a trade that we entered on a daily and weekly time frame that we could have been out in a few days to a few weeks. We've now held almost 2 years. There was no point that we were ever in danger of any major give back. We were always in a position of strength where we could be patient on any correction or any market movement and get what we wanted. One last thing I didn't show you, but on this trade, you can see that this trade right here is a 29R winner as of Friday. 29R. That's how you do it. I want to share this with you because if you want to trade like this, I got you covered. We've got so many great materials that can teach you how to trade like an elite hedge fund manager, how to trade like an elite prop trader, and not just some Joe Schmo who sits in front of a screen all day. There you have it. We'll see where it goes from here. But the great thing is either way, we're going to win. Have a great week.